Okay. Hi guys, accounts class, back to AS 28 class 2. First class we discussed what is impairment and we discussed quite a few examples. Impairment was nothing but decline in the value of asset. For that we saw how do you compute this impairment loss. We compute impairment loss we saw basically we compare carrying value of the asset. This will be compared with something called recoverable value. Carrying amount is nothing but book value, but you should not use the term book value. The standard uses the term carrying value. In fact, in days in CA final, they do not use the word book value anymore. So slowly start getting used to the term called carrying value. That is the term that you have to use. Recoverable value is the higher of two things: net realizable value, or in other words, estimated selling price. What I can recover if I sell the asset today. If I have some cost of recovery, let's say I have a cycle in my house, old cycle, which is 500 rupees, I want to sell it. I put it on the platform of OLX. OLX took 50 rupees commission. So what am I getting net amount? 500 minus 50, you get how much? 450. So estimated selling price is basically whatever you are able to sell minus if you have any cost of disposal, some like brokerage, all of that. This you compare with something called value in use we saw in last class. Nothing but present value of future cash flows expected from this asset. Correct guys, I am just revising quickly from previous session. Those who are watching recording also can stay for the revision, just 2 minutes. Then we discuss the logic of this formula. I told you logic. For inventory, we compare only these two. Because inventory I want to sell now. But asset is something I will use for a long period. That's why I am comparing these two. And I told you, when do I do this test? Like revaluation, which is done usually once a year or once in 3 years. Depreciation done every year. Inventory, cost or NRV is done every year. This is done when? When I have indicators. We discussed in last class. Indicators. To give another example, let's say, do you put Dolo tablet every day? Wake up, Dolo. When do you put it? When you have fever. Do you do blood test every week? When you have fever and fever is not going for some time, then only the doctor will suggest blood test. Then blood test will lead to, okay, whatever diagnosis. That is the indicator. Okay, fever symptom is the indicator that, okay, something is not right. Go do blood test, figure it out, fix it. Correct? Like that, this standard, I'll give you notes for basically every topic. AS 28, quickly, whatever we discussed in last class, summarizing in our notes first. Impairment loss is carrying value minus recoverable. For example, if carrying value is 700, if recoverable is 600, loss will be 100. Carrying value is original cost minus accumulated depreciation and accumulated impairment, if any, previous impairment, we will discuss that. Recoverable value is higher of net selling price and value in use. Net selling price is amount obtainable minus cost of disposable. Are you able to follow guys? This is what we saw. Then I told you we have something called indicators, when to test. We discussed all this last class guys. I gave you example, internal and external indicator. Now let's discuss some more points that we have in the book. Okay, quickly to run through these points. External indicators: significant fall in market value more than what is expected in usage. ChatGPT example, suddenly my software value fell. Next, adverse effect due to technological changes, software, legal changes. What example can I use for legal change? PUBG, did we discuss PUBG guys? Hello, I told PUBG, legal change. India banned PUBG. Chinese company is affected. Legal changes. Economic changes, market change, economic, some war came. So my asset value has fallen down. Some war came and hit. Bomb came. What to do? Gone. Okay. Then look at this beautiful point guys. Market interest rate increased significantly, leading to increase in discount rate. Let me explain this. What is value in use? Present value of future cash flows. Today we are going to discuss this only for next 20 minutes. How to compute this? In financial management you would have learned, if not also cash flow into discounting rate is equal to present value. Okay. Let me take an example that I took last time. 10,000, discount rate at 10%. 10,000 is my cash flow. Discount rate is 20%. If it's 10%, what's my discount rate? 0.1 divided by 1.10, 9091. If it is 20%, 0.8 something will come. How much, guys? Quickly compute. 1 divided by 1.2. Don't look at my face recording. You also compute simply, even if you can't communicate. 0.8333. So what is the value here? 90918333. Correct? Now I am making a statement. Tell me if it's true or false. Higher the discount rate, lower the present value. Correct? See, higher the discount rate, lower the present value. So if my discount rate is 40%, this will be much low. Now discount rate is nothing but which affects for inflation. Correct? If inflation in India is increasing, then discount rate will increase. Correct? So how will India be as a country after 5 years? We don't know. After 10 years, you and I don't know. The discount rate can go up or even discount rate can come down. What if India becomes a developed country? We do a lot of exports, lot of foreign currencies coming into the country. Then discount rate will fall. So look at this. Market rate will affect discount rate. Discount rate will affect my present value. Now come and read this point. Market interest rate increased significantly, leading to increase in discount rate. So if discount rate increases, what happens to present value? Decrease. If present value falls, what will fall? Value in use will fall. If value in use falls, what will fall? Recoverable value will fall. If recoverable value falls, what will happen? Impairment loss. Are you seeing the connect, guys? Getting it? In US, in the year 2021, interest rate was 0.2%. They used to give loan for 0.1%. India loan is 20% interest, 15%. US gives loan at 1%, 0.5%. Why? In borrowing in developed countries is very cheap. 1%, 2% you get loan. Here it's lot. Why? More than risk, demand. Here everybody needs money. So interest rate is high because everybody needs loan. There everybody already has money. So nobody wants to take loan. So rate is low. Are you following, guys? So accordingly, India, based on the economic changes, rate will change. So that's why we have this point. It's a theory point only, but you should know the impact. Suddenly in MCQ, he will ask, discount rate increase from 11% to 14.23%. Will this lead to an impairment? Yes. Because this will affect my present value, which will affect my value in use, which will affect my impairment loss. Got it? Opposite. Discount rate decrease. I don't have to worry because present value will increase. This is my external factors. Similarly, internal factors, physical damage. 2 employees were fighting. They went and fell on the mission broke. Obsolescence, technological change. Economic performance of the asset is worse or will be worse than expected. One marketing guy came and told me, buy this mission. If you buy this mission in TTD, currently Tirupati has one mission whereby you can make 3 lakh laddus per day. Somebody came and Reliance donated a mission worth, really not a joke, Reliance company, Ambani family donated a mission worth 50 crores for making laddu to TTD. As how we give donation, they gave 50 crores laddu making mission in the hundi they gave. What is the advantage of this mission? They told this mission can now make 6 lakh laddus per day instead of making 3 lakh laddus. So I recognize this asset. Imagine I bought the asset thinking I can make 6 lakh laddus per day. But after I started using, I am only getting 2 or 3 lakh laddus per day. So I expected 6 lakh laddus and planned my useful life. Now it's falling. Now read this point. Economic performance, laddus of the asset is worse or worse than expected. Are you following, guys? No other company makes 6 lakh laddus per day except TTD, guys. Okay. In terms of, there was a rich Indian rich list which I recently saw. In India, first richest is Ambani. Second, Adani. Currently, third. Okay. Balaji is the third richest in India currently in terms of wealth. Okay. Adverse effect due to asset is idle. If you don't use Activa, what will happen? Rust will come, value cost, so internal use. Discontinuing or restructuring operation. Discontinuing means AS24. Discontinuing operation. So you will check for impairment. Plan to dispose the asset. So these are triggers, guys, like symptoms to check for impairment. You have to be very, very clear with this, because question will not tell, hey, this is internal impairment, this is external indicator. They will give one story. You should figure out it's internal or external. That's it. So first page of our notes is done. We finished in last class. I am just summarizing in 5 minutes over here. Clear up? Are you following, guys? Since we have MCQ, these questions also are important. Impairment is not applicable for the following 4 standards. I told in last class, but I want to know if you remember. Inventories, construction, in all these standards, impairment is not applicable. Why? They have their own impairment provision. Inventory impairment is cost or NRV. He is already doing it. Construction contracts. Every year you are anyway providing provision. Correct? AS7 says provide for anticipated future losses provided this year. So already I am doing it. Why should I do again? You do double impairment. No. Financial assets. These are shares. They have a separate concept in AS13. AS13 also talks about cost or fair value, whichever is less. Why deferred tax asset? Deferred tax asset, name only asset, it's not an asset. When you study AS22, you will know it is actually not an asset. It's a book entry. For book entry, how I will do impairment? Are you following, guys? So for these standards, no impairment. Remaining all other standards, PPE, intangibles, all those will have impairment. Most of your exam questions will be for tangible or intangible items. That's it. So this page we are fully done. We have another 4 pages. This is my notes, guys, meaning study mat is about 25-30 pages. I don't know the count. But does this theory cover everything in study mat? Yes, I can assure you that. 100% sure. Fine. Now coming to the next set of discussion. Let's do a sum just to keep you all engaged. Recording, online live, everybody here. How we will have is sum theory. Let's do a sum. We will go to our study mat. This is nothing but study mat, just reformatted to make it look more neater. Last class we did illustration 1. You can mark it as important, a classic sum. For exam, 4 or 5 marks worthy sum. They asked 6 things: carrying amount, value in use, recoverable, impairment loss. These 6 things can be a 5-mark question. Everybody, did you understand this sum? I know over there we got confused with date. I got confused with date, and then we figured it out and we fixed it. Are you clear, guys, with that? Anybody wants me to repeat that again? I will do it. Anybody online here? Vignesh? Not there. Vignesh, not there. Oh, he's there. Okay. No, doubt can't get it. Okay. Next. Fine. Illustration number 2. Let's do illustration number 2. X Limited is having a plant asset carrying amount of 100 lakhs. He has given carrying amount. Super. Its balance useful life is 5 years and residual value at the end of 5 years is 5 lakhs. Okay, super. Estimated future cash flows from the plant for the next 5 years is given. Calculate value in use. What is value in use? Present value of future cash flows for plant if discount rate is 10%, and also calculate recoverable amount if net selling price is 60 lakhs. I will also tell calculate extra impairment loss if any. Let's do one by one, guys. First let me create template. Last class I didn't do the sum. It's first sum. I ran through the sum. Now we are going to solve the sum. What is impairment loss? Impairment loss is carrying value minus recoverable amount. Recoverable amount is value, anything, any order is fine. Value in use. More than NRV, we will use estimated selling price. See, I told NRV for you to easily understand. The term is estimated selling price. So I have to find 3 values. 1, 2, 3. Correct? If I find these 3, automatically I can find the loss. If it's there. Correct? Let's go one by one. First, go to the question. Is there any amount already given? Already available, sir. I can copy paste. Carrying value, where is it given? You have to compute depreciation. Or we have to see. Okay, we have to see. Which is straight away given? Net selling price, how much? 60 lakhs. So I will come here, copy and write 60 lakhs. Super, sir. Value in use, of course, you have to compute present value, and carrying value also you have to compute. So first, who will do? You will do it. Compute value in use, guys. For this question, everybody recording online live, don't look at my face. Don't search for fast forward button. Sir will do it. I will copy it. Then your exam also will get rewinded. First, compute, guys. Compute value in use. I want to find the present value. Give me the answers. If you have computed, give me the answers. Let's keep the class competitive, guys. You are coming to class to compete with others, not to make friends and go for a movie. That also you do later after clearing, but no. Compete, guys. As per examiner, he doesn't know who is friends, who is not friends. Compete with others. Yes, I will show the question. It's a study mat question. You can bring study mat with you. It's enough. Okay. Study mat question. Those who have the book, illustration 2. For everybody, illustration 2. Those who have the book of new syllabus, illustration 2. Those who don't have the book, it's a study mat question. That's it. New syllabus, new study mat question. Sumaya says the answer is 118.84. I don't know if she is correct, guys. That's her answer. Please give me more answers. Present value, I know where you will make the mistake. I will challenge you. Half the class will make the mistake. Come on. Present value, FM, we know the time value of money. I am expert. Even if you are writing only group 1 foundation, you studied present value. Did you study this in foundation? No, I want to know. Did you study? Okay. How to find present value? Cash flows into discounting rate. Yes, Kalyan, answer. First. Carrying value, Sumaya says. Sumaya finished. Yes, Sumaya, hand up. Keep it up, keep it up. Sumaya finished. One student is done, guys. Online, I'm telling you, one student is done, so you will know. Online, we have another 30 of you watching. Recording, I don't know how many are watching. Online can put in the chat. Online students who are watching live can interact. Only if you interact, I can interact back. Otherwise, I can't talk to myself. Yes, Ashwin Kumar has given 118.864. Same answer. Now only I'm seeing Padmanabhan's message. What about Kerala? Kerala temple, sir. Most richest temple. We have crossed the discussion. Okay. Padmanabhan temple is the richest temple. They have assets, but I'm talking about recurring income. Recurring income. Hari Sen gave a different answer. Yes, finally. Hari has given answer as 121.91. Netra also gave. Vignesh also says 121.91. Come on, guys. Now the competition is intensifying. Come on, recording students. You will get one of these two answers. 118.84. 121.91. Oh, Dinesh, one more third answer. Oh, 118. Sorry, he has changed back to 118. Come on, guys. Fine. Fine. That's it. Okay. I think we are closing with two answers. How many of you 118.84? Straight up in your house, lift the hand, guys. Online live students, lift the hand. Not only in Google Meet, lift in the house also. How many of you 121.91? 121.91. Okay. I will tell you exactly where you made the mistake, guys. I know the answer. Now, how many of you did cash flows into discounting rate of 10%? How many of you forgot residual value? So, if you forgot residual value, you will get 118.84. Look at the answer, guys, just to save time. Residual, see, 118 point book also has. But next page, if I go, residual value 121.92. So, whoever got 121.92, clap for yourself, guys. Good. Did I do anything? Did I teach anything extra? You reading the question makes all the difference. Reading the question, because FM we don't take residual value, so your mind is tuned to forget residual value. Common mistake number 1. So you get 121.92. So my answer is 121.9192. Round off. Everybody who got that online, good. Padmanabhan got 183. I don't know how we got that. Okay. Maybe carrying value, I don't know. Next, can we compute carrying value, guys? Carrying value, hello. Carrying value is what? Okay, simple. This time, let's not make the mistake of years, guys. Which year is the asset purchased? Having a plant carrying amount of which 100 lakhs on. Okay, he has given the, one second, he has given carrying amount of 100 lakhs on 31st March 2021. Its balance useful life is 5 years, residual value 5, all of that is fine. Okay, that means they have given the carrying value, nothing to compute. How much, guys? 100 lakhs. Who computed 81? How? They gave the answer. You don't change it. I don't know if it's correct. Let me go and check, guys, once for my satisfaction. Is it 100, guys? Whereas they are not computing impairment. They are not asking. They are asking what, guys? Value in use. So now recoverable value, which one you will take? 60 or 121 now? 121.91. Carrying value is 100. Will I have impairment? No impairment. Why? There is no loss. It's more than what expected. Carrying value, book value is 100, but market price, recoverable is 121. No need to do impairment. I had fever. I went and took blood test. Everything is normal. Doctor said, go back home, sleep, you will be fine. Nothing to do. You are fine. Are you following, guys? So there was an indicator. I did the test. Nothing happened. So continue. Are you following, guys? Can we proceed? Okay. Illustration 2 is done. Illustration 3 we can do, but not now. I need to teach more concepts. So now, are you getting control over this chapter? Hello. Let's proceed further, guys. This is the basics. A sum like this may come, but the standard has so many more things that they can test. We have only entered into 20% of the standard, guys. Next concept is to go in detail about this value in use. Fortunately or unfortunately, study material doesn't have even one sum in this concept I'm going to teach now, but it's a theory concept in the book. It's there in study mat, part of our syllabus, so we're going to learn theory. Sir, I want to solve sums in this. I will do extra sums. We have sums from CA final in these concepts, but it's part of our syllabus. Let me finish theory. Value in use is cash flow into discounting rate. Correct? Now my question is this cash flow before tax, or in other words, I'll just give you a simple thing which you can understand. Should I take earnings before interest and tax minus interest, earnings before tax? Everybody knows these terms, guys. Minus tax, earnings after tax, EAT, okay. PAT, okay. Which one to take? 3 options: earnings before interest and tax 1, earnings before interest or profit before tax, or profit after tax for cash flow. Correspondingly here also, discount rate, should I take normal rate of 10% or should I do rate minus tax minus interest? Do you know in FM we have weighted average cost of capital, weighted average cost of borrowing? Which rate to take? See, so far the questions you have done, they gave 10%. But we have in theory no sums. Final, I'll give you sums for you to practice. Today itself I'll show you from final book. But now, which rate to take? Let's do it, break it one by one. Which cash flow to take? How many of you, just guess, EBIT? How many of you EBT? How many of you PAT after tax? Okay. I have 2 I'm not telling the answer. I'll give an example. Then you tell me the answer. I want you guys to think. I have 2 assets, okay? Ola cab, car 1, car 2. Car 1, Ram is driving. Example, okay? Car 1, he is driving. Car 2, Charan is driving, okay? I gave car to both of them. Ram took this car. He purchased the car. Car is 7 lakhs. He told, sir, take the full 7 lakhs. He gave 7 lakhs and purchased the car. Charan told, I don't have 7 lakhs. I will buy the car on EMI basis. So I'm sure if you have used Ola Uber, you will know some of the drivers have their own vehicle. Some take it on loan. Okay. Both of them are working hard. Ram is driving 16 hours a day, except sleep. Rest of the time he is driving. Charan also is working 16 hours a day. Okay. The income they earn, is it going to be same or different? Both of them are in Chennai, similar location, same or different? Why different? No, I am saying income, not net income, gross income, same or different? So let's say in 16 hours, roughly calculation, every hour 2 trips, so 32 trips, let's say roughly he is earning 100 rupees per trip, roughly 3,500 rupees, I am rounding off guys, it's 3,200, I am rounding off to 3,500, okay, 3,200, whatever, okay, 3,200 is the income, both of them earn, correct? So, both the assets are able to generate a cash flow of 3,200. Will Charan's car talk to him and tell, hey, I am a car on EMI, I will not get this much, I will get only 1,500? No. What I am able to generate is 3,200. But what I take home is minus interest, let's say 500 rupees interest, let's some 2,700 is what I can take home. Now, what you take home is what you get. Does this affect the quality of the car? Whether you purchase the car on loan or full payment, does it affect the quality of the asset? Does it affect the income the asset can generate? No. So this, what is value in use? Go read value in use, the term they use for value in use. What is value in use? Look at this, I am just zooming in. It is the present value of future cash flows, not profit. Future cash flows expected to be derived from an asset. Second part I will explain. What is cash generating unit? This is a different concept. Second half we will go there. Okay. Cash flows expected from an asset. What is the cash flow I can expect from the car? 3,000. Whether it's a loan asset or a non-loan asset, will the cash flow change? So the standard says interest and all is later. What this asset can give me is 3,2. So now you tell me guys, EBIT or EBT or EAT? Answer, EBIT. So logic you will never forget. Sir, interest I understood sir. Why tax? Some companies tax exemption. Some companies will have to pay 20% tax. Some will have 25%. Some will have MAT. Some will not have MAT. Different things. That cannot determine the ability I can do. See, my effort can generate 3,200. That's it. So what can I get from this asset? Are you following guys? Everybody understanding? Okay. So I will take only EBIT. Therefore, discount rate should be a rate without tax and interest. That is weighted average cost of capital. It's not weighted average cost of borrowing. Are you following? Understanding? Next, I'm going to again ask you questions. You give me answer. Then I will go and finish off all the theory in the book. Okay. Next. Let's finish off discounting rate first. Discounting rate. I have same car 1, Ram, car 2, Charan. But this time Ram is driving the car, let's say in Pondicherry. In Pondi he is driving. Charan is driving in Chennai. Now will the income be same? No. Or instead of Pondi, let's say he is driving in Trichy. Will the income be same? No. Because the pricing is different and the roads are different. Chennai roads, we know how it is. Pondi roads will be better. So the roads will affect the wear and tear of the asset. Chennai flood came, gone car. Pondicherry no flood, so car is safe. So the risk of the asset depends on where the asset is used and how it is used. So I am only asking you a question. Can I have different discounting rate for different assets? For car 1, can I have 10%? Pondicherry. Car 2, Chennai, more risk, 15%. Can I have a different discounting rate? Yes. Different assets can have different discounting rate which is specific to that particular asset. So the standard gives a simple guidance. Sir, is that okay sir? For exam, what I should remember? Standard says first look for the discounting rate which is specific to a particular asset, and for that asset what is specific? Not everybody can take a dolo when they get fever. Each patient doctor has to individually assess and give a medicine, correct? So asset wise discount rate. Then they are saying, ayo, This is not available. Okay. Not available means what to do? Take weighted average cost of capital. This also not available. Then take weighted average cost of borrowing. This also not available. Take some other similar borrowing rate. This also not available. Go try to find a rate. Okay. So look at this. I am discussing the points in relation to discount rate. Whatever is in this yellow or whatever color you can see here, light orange. It must be a pre-tax rate that reflects correct market assessment. Consider time value of money and risk specific to the asset for which future cash flows are estimated. Where is my car? Chennai or Pondicherry? If this specific rate is not there, then use weighted WACC. If WACC also is not there, incremental borrowing rate, which is weighted average cost of, that also not there, some other rate I have to take. Are you following, guys? And last point, when you do discounting, year 1, year 2, year 3, year 4, year 5, all the sums you have done so far, every year I will take 10% in FM, correct? But isn't that fundamentally wrong? How can the risk be same for every year? The risk of clearing CA inter is different from risk of clearing CA final. You can't put the same rate. Are you understanding, guys? So standard says, think with common sense. What risk I have in year 1 cannot be the risk of year 4. The time value of money will always not be 10%. That means what you are doing in FM is fundamentally wrong. So this standard says, each year you can have a different discount rate. Each year adjust with a different tax rate of that year. Are you following? This is the theory. Look at the last point. Entity can use different rate for different periods if value in use is sensitive to different risk in different periods. Sir, all this theory, sir, do we have a sum in this? Fortunately, unfortunately, study mat doesn't have a sum, but it's a theory. I will give you some from final book for practice, but in our exam, so far in inter, or first time in inter it's coming, but so far in exam or the book from the trend, how they will ask discount rate, he will give like this, 10% saved. You don't have to worry about anything. But suppose in MCQ, if he is giving you multiple rates, what to remember for exam? First preference, rate specific to the, look at this, first preference, rate specific to the particular asset. Second preference, where are cost of capital. Third, cost of borrowing. Fourth, other borrowing rate. That only is given over here. And it's of course pre-tax. Understanding it's a theory, we don't have sum, but very much they can ask how to confuse you. Give us sum with 2 rates, which rate to pick, that's it. Don't expect the complication of entity can use different rate for different period. That sum is not there in final also. So it's a theory concept. Just tell yes, can I use different rates for different period? Yes, understood logic. Got it. Okay, that's it. So now we are discussing this formula. What is value in use? Future cash flow into about discount rate. I gave it here. Can you see the whole page, guys? Following up. Now I should know about cash flow. What to include and what to exclude. Again, we have theory, no sum, but very much they can ask. Already I finished a few points. Let me tell the points I finished. Don't include cash flow of financing activities like interest. Don't include income tax payments. Are you following, guys? Now some more points. Take the same car. Car is an asset of PP. This car is generating, in our example, 3,200 rupees. Ram is able to generate in terms of Ola or Uber. But what is left with him? He has to pay for mainly petrol or diesel. Let's say 1,500 rupees goes off for petrol or diesel. So now he is left only with 1,700. Now when I am doing the cash flow multiplication, should I take 3,200 or 1,700? What I can get is 3,200. But what I will also lose is with every cash flow 1,500. So day-to-day maintenance expenses for the asset will be reduced and you will only take the net cash flow. If you look at the core concept, we are only looking at what can this asset generate by itself. Forget the income tax and interest. Are you getting it, guys? So now if you come here, look at this, includes Should I mug up this includes and exclusion? If you want to waste time means you mug up. Otherwise, be aware with concepts, nothing to mug up. Okay. So accounts, they will not ask you what is included in value of user, what is excluded. MCQ. Okay. So projected cash inflows from use of assets, our cab example, 3,200. Cash outflows which are necessarily incurred to generate the cash inflows. Petrol. Petrol is necessarily incurred to generate the cash inflow. I hope it's visible in online, guys. I hope I've zoomed enough. Okay. Then residual value you already considered. I didn't even tell you. You take residual value. And cash flows for day-to-day servicing. Maintenance can be reduced, like repairs and maintenance, puncture, all that I will reduce. Are you following, guys? Includes is simple. Excludes, this is the one. Last 2 points. You tell me the answer. Logic. The asset car, what Ram did, now he wanted to remodel the car. So what Ram did now, he changed the car fully, he put massage chair for himself, he put double engine, he basically upgraded his car. It doesn't look like a cab now. Okay. This expense is capitalized expense or debit to P&L. I will capitalize. So in year 3, Ram spent 2 lakhs to upgrade his car, made it look like a sports car, put some extra engine, all of that. So he capitalized. This, in year 3, he earned 3 lakhs in cash flow. Should I set off or no? No. Why? It's a one-time thing, but it's a capitalized. You don't reduce, you don't take capital to P&L. Cash flows is P&L. This capitalized, deal with as per AS 10. Another next point, look at this. Any cash outflow for enhancing the asset performance is the term they use in book, but it's nothing but this is capitalized. So it is excludes. Don't learn exclusion this point. Learn this so you know it is excluded. Are you following, guys? This happened in year 3. Looking at this, Sharan told, hey, what is this? Your car looks like this, my car looks like a regular Maruti Suzuki cab, like every other car. So he also told, I am also going to do remodeling. Wait for my remodeling. I'm going to do next level remodeling. Then, but Sharan doesn't have money now. Why? A loan, EMI, I told no. He's on EMI. For EMI, he doesn't have money. So can he do remodeling now? No. So he told, first let me finish that EMI. In year 6, I am going to remodel my car. Wait for it. He is waiting 3 years. I'm going to do it. Now, a planned restructuring of the car, can I reduce? Can I reduce this in cash flow now itself? Why? It's only an idea. He has not committed himself to it. So, future restructuring which entity is not yet committed for will be excluded. Are you following, guys? Getting the logic of that's it. Look at this. We are almost done with second page also. Second page basically, second page in the notes, second page. Read with this. Discount rate or value uses cash flow into discount rate. Sir, all this fine, sir. For exam, what I should know? Simple. Cash flow, what to include? Recurring cash flow from the asset minus with recurring expense which is necessary for that asset. Anything capitalized? No. Any restructuring cost? No. Financing? No. Income tax? No. That's it. Discount rate, first option. Asset specific discount rate. Not available. VAT. VAT also not available. Weighted average cost of borrowing. That is also not available. Similar rate. That is also not available. Exam they won't ask. Don't worry. Practical only that challenge you will have. That we will discuss later. Once you come to articleship, you call. Okay. Fine. Understanding, guys. Now, next set of questions. Future cash flows. For how many years I can project? Are you following, guys? For how many years can I project the future cash flows? All this is theory. MCQ he can ask. How many years can I project, guys? 7 years? 10 years? My wish. This standard says, see, look at the formula. What is the formula? Carrying value, which is recoverable value, is value in use, estimated selling price. Now look at, when I break open this, carrying value is cost minus depreciation is an estimate. Recoverable value is value in use. Value in use, cash flow is an estimate. Discount rate is an estimate. Estimated selling price also is an estimated selling price. It is whole impairment loss is an estimated loss. How many estimates I am doing? In this again you want to estimate cash flow for how many years? Are you following, guys? How much estimation is that? That means it. Okay, now then I am saying in auditing, financial statements give a true and fair view. Financial statements give a estimated true and fair view is the correct term. So standard says already we have enough estimates. You want to take cash flow for future, take it, but estimate for 5 years, not more than that is what they recommend in the standard. Are you following, guys? So if the management has to compute value in use, compute for 5 years and not more than 5 years. Can I do for more than 5 years? Now Jio is coming and arguing. Jio, Ambani is coming and saying, I have the rights to telecast IPL in Jio Cinema app. So my right is an intangible asset, license. For the next 7 years, from the year 2024, for next 7 years, IPL you have to watch in Jio Cinema for free. Why he is giving for free? Free, but he is getting what revenue? Ad revenue. It's not ad free. It's match with ads. So he will earn ads. So Jio is telling, Ambani is telling, see, my license to telecast the IPL match is there with me for the next 7 years. That means certainly I will get cash flow for 7 years. In India, considering people, they will watch IPL, whatever happens. Even if you lose the World Cup, IPL will watch and will celebrate. So next 7 years, everybody will watch IPL, cash flow mandated. Why should I do 5 years? He's fighting. No. I will take 7 years. Can I take 7? Yes. Getting the logic. Standard says, I recommend 5. But if you can prove or give a justification for more than 5, happily take that more than 5, but give justification. Are you following, guys? That only is the last point. When you are evaluating cash flow, again theory point, guys. Reasonable and supportable assumptions of management. Estimate, no. So give some justification. Greater evidence to external evidence. Some other company, how much cash flow they are getting is more relevant to me than what I think I can get. Are you following, guys? Next, most recent budgets. Use the most recent budgets. Just some theory points. Don't mug up. What is important? Recommended period is unless a longer period can be. Are you following, guys? That's it. We are done with this except one small concept. Easy, guys. Whatever I discussed here, do we have an illustration? No. But it's very much part of your syllabus. So don't take it lightly. It is like that AS17 one standard is that. What is that? Segment reporting. There are so many concepts, but examiner so far, he will ask only one question. Asset test, result test. Asset test, result test. That's it. He will ask that. Like that, we have these concepts. Whether he asks or not, we only have to wait and see. Okay. Sums for practice I will give you. If you want, I'll just give you the sum number final book. We will try to do 1 or 2 sums. That's for additional practice. Before you do any extra sum, new syllabus study mat, all sums in book you first be clear. Then you do extra sums. First you be very confident and clear with the book sums and book concepts. Then next. Can we proceed, guys? Last one small concept. Okay. Now we are going to look at how do I account for foreign cash flows. I'll give you 2 options. You pick one. I am Agarwal Eye Hospital, for example, let's say. I am from Agarwal Eye Hospital. I have 2 hospitals, one in India, one in Africa. In reality, Agarwal Eye Hospital has 12 branches in Africa. There, they deployed a new mission for LASIK eye surgery, where that mission itself will do half the surgery and generate cash flow, or some eye testing. 100 rupees if you give one eye test site, if you just go sit there, it will do mission. Okay, it will do the test. Are you following, guys? Now, this asset in Africa, people are paying money. What is African currency, guys? I don't know. Let's keep as dollars. Okay, in Africa, African dollars, this mission is generating me $1,000 per year. So it's like an ATM. Anytime I check up. Okay. Anytime ATE, anytime I check up. Okay. So we'll name it as ATE 8. Oh, sorry. Okay. Anytime I check up, go sit there, give 100 rupees, sit there, they will do some scan and give a report. So they generated $1,000. I have to bring it to India. This is future cash flow, sir. So this $1,000 should be converted to rupees. I will give you two options. You pick what you think is correct. First option, $1,000 convert to rupee, assuming rupee is 80, make it 80,000. Let's assume this is year 3 cash flow and then multiply with 10% of year 3 and find present value. Option 1, we'll call it option A. Option B, $10,000. First you multiply 10% in year 3 and compute present value in dollar and then multiply this into 80 and bring it to INR. Can you note the difference? First I am converting to rupee, then I am doing discounting. Here first I am doing discounting in dollars, then I am doing converting to rupees. Which one? How many of you option A? Sir, first convert, sir, then I will do discount. How many of you know, sir? Option B, sir. First I will discount, then I will convert. Option A. Option B, both hands. Yes. Okay. Who told both? So, yes, Vignesh. Now, simple logic. I am not giving the answer. I am again going to tell a 30 seconds concept. You figure the answer. What does discount rate represent? Risk. Inflation along with the risk of me receiving that cash flow and time value of money. In simple inflation, this dollar is coming in which currency? Which country? Africa. So I should use inflation rate and time value of money of Indian rate or that country. So which method? Which method, guys? Method B. Because this discount rate, this is dollar rate. So that currency should have that currency risk only, no? The chance of me getting $1,000 in year 3 depends upon the risk of the asset in Africa, not about the risk in India. How can I use Indian discounting rate for a foreign currency? Are you getting the logic, guys? So you will never forget. So what is the answer? Method B, convert to first discount in dollars, then convert to INR using the spot rate. Why spot rate? Present value. Present value means today's rate. Spot rate. That only is there over here. Again, do we have a sum? No, there is no sum in inter or final book. But if examiner wishes AS 11 read along with AS 28, he will ask a sum. Are you following, guys? So, foreign currency future cash flow. Sir, steps, sir. All this nonsense I don't want, sir. Exam, what are the steps? I gave steps. Discount the foreign currency cash flow using the foreign currency discount rate. Convert the present value of foreign currency to functional currency using spot rate. What do you mean by functional currency? Home currency. Indian currency. I can't use the term India because what if India is... So functional currency means home currency. That is a term not in this standard. It's a term in AS 11 revised. Okay. You use as home currency, reporting currency, enough. Okay. They won't test that much detail, guys. Don't worry. Done, guys. Okay. Now before I proceed to next set, so far for exam, what is important, sir? 1 minute revise for exam. Impairment is a, loudly guys, sudden decline in value of asset. Is it a permanent decline? No. This decline is computed comparing carrying value with recoverable value. Recoverable value is the higher of value in use or estimated selling price. When do I check for impairment? Internal or external indicators. For finding value in use, cash flow into discount rate. Discount rate, which rate? Asset specific rate. Not there. WACC. WACC not there. Weighted average cost of borrowing. That is not there. Similar. But in exam, they won't go that detail, but just be aware. Cash flow, you know what to include, what to exclude. The cash that asset can generate, exclude tax, financing items, restructuring will be excluded unless there is any commitment. Necessary expense I will do. Any capitalized expense, capitalize. Don't take it over here. Foreign income, foreign cash flows, very simple. One extra step. First you discount in that country, Then you convert to spot rate because it's anyway present rate. See, year 1, year 2 till year 5 already discounted to year 0. So I will convert to INR using spot rate. How many years I can predict like this maximum? 5. Can I go more? Yes, that's it. Now we are going to go accounting for this loss. All this while the last 1 hour, 30 minutes or how much ever time we spent, the time we spent is to compute impairment loss. Correct? How to account? That is the next set. I will give an example. You understand this example? We are done. 100 is the cost of asset. Depreciation is 20. Carrying value is 80. I understood that the recoverable value is 90. How much is impairment? No impairment. Thankfully, you told no impairment. Okay. I understood my recoverable value is 70. What is the impairment? 10. Can you tell me the entry for this? P&L account debit to whatever asset. That's it. 10, 10. Write off the asset. That's it. Following, guys. Now, later, this happened in year 3. Later, after another 3 years, again 70 became 95. Possible? Or let's not say 95. Let's keep it simple. It became 75. That means decline, I told you it's not a permanent decline. It can again increase, no? How? Give an example. PUBG. I give you PUBG example. India released the ban. We can play PUBG. So China is happy. Chinese company is happy. We are back with Indian users. If they release the ban, again everybody will start playing. Still some people play, leave them, but I'm just saying. Okay. Now, what is the entry? Can I reverse my entry? Is the question. Can I reverse the loss? See, is this an actual recognized loss? Is it a cash loss? It's a book entry. So now can I reverse that book entry, book loss? Yes, correct. Just like revaluation. Revaluation goes up now, you will increase, comes down now, you will decrease. So here also no reverse entry will be asset account debit to P&L how much? 5. Understood the first stage of illustration. No? Keep taking running notes, guys. These numbers and all, I don't know where you will find them later, but I gave theory is there, but keep taking running notes. Are you following? Next, 70 now became 95. Again increase. What's the entry? Asset account debit. How much? 25. See, 70 became 95. 25 to what, guys? P&L how much? 25. Are you following, guys? Everybody understanding? But do you find a problem in this? See, when I use the word reversal of loss, it should be reversal of loss incurred. What was my loss incurred earlier? That means I can reverse only up to 10. Correct? Reversing beyond 10, in effect, can I say 80 became 95, so that extra 15 is what? Revaluation. So this entry I will rewrite as asset account debit 25 to P&L 10 to revaluation reserve 15. Are you getting it, guys? So reversal beyond original cost or beyond original carrying amount is a revaluation. So any reversal beyond 80 in this case is a revaluation. This standard tells go read AS10. Reading both together, this is our answer. Are you following, guys? Anybody wants me to repeat this again? Okay. Following, guys. We have still long way to go. Now, make note of the example, guys. We are only entering the standard, guys. Still interval has not come. Not even half standard is over. Okay. Follow. This is the first example. Now I am going to make the example more little complex. Cost was 100. Depreciation is 20. Carrying value is 80. I did revaluation before impairment. Possibility is there. So add revaluation 10, 90. Now the revised carrying value is 90. When this revaluation happened? Sometime in the past. Are you following, guys? So now I am doing impairment of an asset which was revalued. Are you following, guys? This 90 is now becoming 85. What's the entry? P&L account, debit 5. See, credit to asset, there is no doubt because asset value is coming down. Can I debit P&L? Revaluation, for this asset you have a balance of 10 in revaluation, therefore I will not debit P&L, I will debit revaluation reserve or revaluation surplus account. Are you following the difference? Getting the logic? Understanding, guys? Yes? Sure? Next to Kalyan, I forgot your name. Nafis, understanding? Sure? Tell me the answer for this, Nafis, then. In asset from 90 has become 75. What is the entry? I will tell you credit to asset 15. Asset value reduced from 90 to 75. Correct? What to debit? P&L how much, guys? P&L will be how much? 5. Revaluation reserve account debit 10. It's actually the other way. First debit revaluation reserve to the extent of the balance available. Beyond this, go and debit the P&L. Are you following, guys? Easier. Understanding, guys? Now, again 85. Again 85 has become, let's say, 90. Possibility is there. Sir, what, sir? Question will come later. Again 85 became 90. Again plus 5 goes where? Back to revaluation. Until that revaluation is there, we will have revaluation. Beyond that goes to my P&L. Okay. Understanding, guys? This only I gave it in notes over here. Look at this. Impairment of an asset. Forget the other side of the book. Note will come there later. I am talking about accounting for impairment is important. Accounting for an. Look how I have simplified the notes. Charge to revaluation surplus if available. Charge to P&L thereafter if no revaluation surplus is available. That's it. Leave OCI, it's other income. I took the material from my final class. There we use something called OCI, other comprehensive income. Ignore it. Other income, guys. You have revenue from operation, other income. In P&L, other income. I'll make the change and again I will resend it to you. Okay. Following, everybody understanding. Those who get the print of this will get other income only. Done, guys. Simple notes. Reversal of impairment. We saw reversal also. Look at reversal. Initially reversed to the revaluation surplus. To the extent of revaluation surplus, had there been no impairment, loss. Here, the 10, to the extent of this 10, you can move up and move down the revaluation. Thereafter, transfer it to P&L, which is my other income. Are you following, guys? Now tell me answer for this, then I will say you understood. 90 became 75. This is the entry of 75 became 100. Tell me the entry. Slowly. Asset. I like the first one. Asset account debit. I will write, guys. 25. 2. Revaluation. Reserve. 10. Okay. 2. P&L. 15. Can I say it's correct? No. No, simple. Earlier, how much I debited P&L? 90 became 75. This was the end. This is not correct. Don't write this. Follow carefully. Earlier, I debited when 90 dropped to 75. I debited revaluation reserve 10 and I debited P&L 5. So first reverse what you debited earlier. This was the previous entry of, first reverse that to P&L 5, because when I can take a loss of 5 to P&L, reverse that back over here, and then now revaluation surplus 10. How much is done? 15. Still how much is there? 10. When I pass this entry, 75 plus 15, it has reached 90. It has gone back to my original carrying. Now from this 90, it's going to 100. Look at the travel, guys. 75 first became 90. This is the entry for 75 to 90, correct? Beyond 90 to 100, I will write 2. Usually I can take to P&L, but this is again going back to the first concept. This is another revaluation. So this is actual revaluation. So it will be, revaluation will actually be 20, P&L 5. But the revaluation 20 has two parts. 110 is the reversal of earlier, 110 is the new revaluation. Are you following up? 110 is the old impairment reversal, 110 is the new revaluation. All possible scenarios I'm completing, guys. Are you getting the logic? In simple, you can take to P&L credit only what you debited. You can take to P&L credit only what was debited. Everything else goes to my revaluation. Are you following, guys? Okay. So this notes is correct if this is applicable up to carrying value of asset. So if I have to fill this, thereafter transfer it to P&L up to carrying value. Look at this, where in this case 75 became 90, then again became 100. So up to 90 we have two buckets, 5 P&L, 10 revaluation. 90 to 100, 10 is revaluation. So I should rephrase this as, thereafter transfer it to P&L up to carrying value, and beyond this revaluation reserve. Are you following, guys? This notes I have given it to you up to carrying value. Beyond that it's implied, but I will give a note. It's there. I'll just add another note here. Are you following, guys? Clear? It's actually there. Sorry, guys. I thought it's not there. I've given it here. The carrying value after reversal cannot exceed the carrying value of the asset had there been no impairment loss recognized for that asset. Impairment reversal cannot lead to revaluation of asset. If it's leading to revaluation, if it's 90 is becoming 100, treat it as a separate transaction of revaluation. AS 28 ends at 90. 75 to 90 is AS 28, 90 to 100 is AS 10. Are you following, guys? Understanding? Standard easy or difficult now? Hello. New topic, new syllabus. AS 28, 15 and AS 25. AS 25 is very easy, interim financial reporting. 28 is complex, guys, we have to learn. AS 15 is next level complex, one of the most difficult standards ever there, brought to inter. When we get there, we will discuss. Leave it now. Okay. AS 15 gratuity employee benefits is difficult in final itself. I don't know why they brought it to inter, but it's there. We will learn. We will just hope they ask basic sums. They have basics and complex sums. We'll do that. Okay. Fine. Done. Understood? With this interval break, no break for you, half standard is over. Half the standard is done. What is the other half? Look at this. Look at this example for you to understand what I'm saying. I will give you a short break, not now. We are going to have class till 2 o'clock today. Long session. I want to complete the standard till 2, but don't think I will take till 2. I will give you a short 15 minutes break. Then after 2, lunch break, and then we will resume for other students, not for you guys. Okay. Fine. Vignesh, you will be here till we end. And those who are watching recording, nothing to worry. The recording you are watching means you are watching AS 28. Okay. Fine. Let's proceed. How many of you have been to Sri Mithai in Chennai? Others? Dinesh, what you did after coming to Chennai? You didn't go. Others, Sharan, Ram, what are you doing? From when you are in Chennai? From you are born, you are in Chennai. Never went to Srimittai. Why? Okay. Fine. Okay. Leave it. Those who are watching online, leave it. Guys, Srimittai is a famous sweet shop. So they sell, let's say they are selling Kaju Katli. Okay. How Kaju Katli is made? They have to add this ghee, milk, sugar, cashew. How they will buy all these? They buy a few things, but Srimittai has their own cows where they produce milk. Using that milk, they make ghee. So I will break down Srimittai into typically 3 departments. Okay. Product, let's say the agri department, from where they get raw materials, production department, and the retail outlet where you would have gone and bought Kaju Katli, but Ram has not gone. So, Sharan, following guys. Now, let's say in the production department, one machine which is mixing the sugar into water, we don't manually mix, there's a machine, that machine got spoilt. That machine which is mixing the sugar got spoilt. Okay. Some damage, flood came or some short circuit, some internal physical damage. So symptom for what? Impairment. Don't use the word symptom in exam. Indicator of impairment, which indicator? Internal indicator. Vignesh, don't write symptom in exam. Internal indicator. Okay. Now follow. Sugar into water. It's so how to compare impairment loss? Impairment losses carrying value versus recoverable value. What is carrying value? Book value of that asset. Easily I can compute. Recoverable value, value in use, estimated selling price also I will compute. If I sell this now, how much I will get? How to find value in use? Cash flow into, what is the cash flow that machine can give me? Are you following? What's the cash flow that machine can give me, guys? Nothing. Machine has no direct cash flow. Machine gives the sweet to retail. Retail outlet only gets me cash flow. That means you can't compute value in use for this machine because there is no direct cash flow. Like an Ola cab car, we don't have it here. I'll give a better example. We are in a classroom. Those who are watching recording, just visualize a classroom over here where we have chairs, projector, camera, mic, one board where I'm writing, one Wacom tablet where I'm writing, screen for projector, AC, all this is there over here. Those who are watching recording, I'm not recording in my house. We have 50 students over here, 50 online, whatever number. Okay. Are you getting it, guys? Now, this classroom, see, this classroom is an asset for me. I'm introducing a new term you have never learned ever. So, it's an asset for me which is generating income. Meaning, in this classroom, we will have CA interclass, we have CA foundation class, we will have CA final class. So, this classroom is the facility from where students are coming, paying fees, and academy is generating cash flow. Correct? Now, let's say in the classroom, AC is damaged. Very cold, sir. Vignesh broke it one day. Sir is not turning it off. So, AC, Varsta, he broke the AC. Those who don't know Tamil, Varsta means broke. Okay. He broke the AC. So, after breaking the AC, will my cash flow be affected? Will students not join because AC is not there? Timing, but yeah, those who are watching recording, just know AC is turned off. You will not understand the prompt joke over here. Leave it. Okay. Now, come back, guys. This. Okay. So, now follow, guys. AC is damaged. Okay. Now, I want to find impairment for AC. How to find value in of AC? Can I say students are paying fees because of AC? Are you following up? That means there are some, projector is damaged. If projector is not there, I will use board and take class. Camera is not there, still the class will go on, or laptop is not working. Somehow, can I say, if laptop is damaged, or this, let's say this mic is damaged, How to find value in use for mic? What is the cash flow from mic? It is not the mic alone, projector alone, AC alone. It is all put together that is generating cash flow. So these things put together, this production unit put together is called a cash generating unit. We call it as CGU. It's called what, guys? CGU, cash generating unit. Very, very important term. Can this unit generate cash for me? Yes, this classroom can generate cash. This production facility as a unit can generate cash for me with the retail put together. The cow alone can't generate cash. Cow along with the production, along with the retail store, ellame setana CGU. So they have defined what is CGU. You have to memorize that. Smallest identifiable group of assets generates cash flow independently from other group of assets. Here in the class, those who are watching recording, we have two classrooms here, class 1, class 2. We are all sitting in class 2, graphical architect view. Okay, we are all in class 2 now. Okay, class 1 also a different class will be going on. Now, can I say classroom 1 is one CGU, classroom 2 is another CGU? Academy is one entity. Can I say classroom 1 and classroom 2 are separate CGUs? Look at this. Smallest identifiable group of assets in this classroom, chair, no table, sorry, AC, projector, all these are smallest group of assets, generates cash flow together independently from other group of assets. Meaning, if in the other classroom class is not happening also, this class will generate revenue for me, correct? Recently, after flood in the second and other classroom, ceiling fell. Classroom 1 over here, ceiling broke and fell down. So the class could not be kept there. But did the class stop here? No. This classroom, nothing fell. So we can have the class. So this unit can independently generate cash flow. Are you following? Now come to Srimita example. Can I say this agricultural department, is it a CGU? Is it a CGU? No. Can it generate cash flow? Is it selling the milk outside? Nobody even knows Srimita has a cow farm. They are only transferring the milk to the production. Can I say production department is a CGU? No. Retail unit. All three put together is the smallest group of asset which is generating cash flow independently from other group of assets. Sir, what's the other group of assets? Everything you took, no sir. Srimita will have other branch, branch 2, admin office. Now admin office is on leave, I don't care. This unit can generate cash flow for me. So they are trying to say, identify that smallest unit. Now we are in the class. Here admin office outside, there is one system in admin office. Or printer, guys. We are in the class, printer is there outside. Will that printer be included in our class? No. Those who are watching recording, visualize, guys. Classroom means you should understand. You should have gone to some class sometime. So in the classroom, outside printer is there. Can I include? Outside the classroom, shoe stand is there for keeping chappal and shoes. Will that shoe stand be part of the CGU? No. Group of assets which are collectively helping me to generate cash flow. Are you following? That's called a CGU. So, if AC stops working, I have to compute. If AC stops working, I have to compute. Look at this. Carrying value for AC, recoverable value for AC, value in use for AC and estimated selling price for AC. But I can't do it because value in use is not possible. So the standard beautifully tells what they are saying in standard. If an asset independently, you cannot test it for impairment. AC separately cannot be tested for impairment. Then test the whole unit. Then they are saying check the impairment. You will check the impairment for the entire CGU. This only is final concept. So why you are teaching us? We have theory in our book. We have basic sums. There are crazy advanced sums. But basic sums is there in inter. We will do those sums. So now I will check carrying value of CGU, recoverable value, value in use of CGU together, estimated selling price of CGU together. To give a simple example, I went because I had fever, unable to identify the fever. Then we will do blood test for full body checkup, test the whole unit. CGU, are you following, guys? It's not one independent asset. Sir, stomach pain. Stomach alone, I'm diagnosing, not able to figure out the problem. Then we have to do blood test for the whole body and identify the cause of it. CGU. The exam don't write body is CGU. One organ is asset. No. Okay. I'm just giving examples to connect. So this standard second half says you have to do impairment for a CGU, not ICU, guys. Following cash generating unit. What is the cash generating unit? Loudly with me, guys. Smallest identifiable group of assets generating cash flows independently from other group of assets. Now I will give examples. You tell me if it's a CGU or not a CGU. Okay. Because exam question can come like this also. CGU or not CGU. Okay. Reliance purchased Dunzo 26% stake. Everyone knows Dunzo app. Dunzo app will close down in 1 year maximum if nobody saves. They are in extreme losses. Monthly they spend 100 crores more than what they can actually spend. Enough money is there for next 4 months. After that, no money. Reliance is not supporting, some kind of a war going on. Dunzo founders already quit. So company is in the verge. Okay. Reliance purchased Dunzo. Okay. But Reliance has multiple other businesses. If I have to name the business, we'll need half an hour. Just give a few examples. Jio, Reliance Trends, Digital, then Ajio, then anything else? That's it. Mumbai Indians, then other sports investment. Okay, fine, guys. Now, for Reliance, Dunzo is a CGU. Are you following up? For Reliance, even though they have multiple streams of cash, whatever happens, whether Mumbai Indians wins or loses, whoever is the captain of Mumbai Indians, Dunzo will operate. Dunzo doesn't bother about it. This entire segment has nothing to do with the operation of Dunzo. Correct? So Dunzo, now look at the definition. Smallest identifiable group of assets in Dunzo, the software generates cash flow. It's not a free app. Independently from other group of assets. So give me more examples. Byju's, one more company, going to close down soon. I like companies which close down. Okay. Byju's purchased some company called White Hart Junior, and they purchased another IIT company called IIT Training, like CA Training, IIT Torture, Akash Institute. Okay. Yesterday only, government actually, just 1 week back, I don't know how many of you noticed, government released the notification for coaching institutes. Since I'm talking about this, coaching institutes in India like IIT, Kota Factory, many other, because of a lot of stress and suicides happening in all these centers, they released a strict notification for all private coaching institutions in India. I don't know how practically it's going to work, but they released a law is passed already. I'll share it maybe someday. Per day in a coaching institute class, there are many provisions. I'll tell the main ones. Per day in a coaching institute, class should not be for more than 5 hours. For all institutes they have put. Practical, don't look at me, guys. Sir, you are taking 10 hours a day. They told more than 5 hours. Students should not be given stress. Then every coaching institute should mandatorily have a psychologist in there for any stress relief for them. It's mandatory. Law has been passed. Whether it is practically, who will follow, who won't follow, I don't know, guys. You have to wait and see. Just Google about it, you will find. Finally, all the IITs, everybody, per day more than 5 hours, no class. Okay. No, today we have, guys, but I'm just saying generally. Okay. So Byju's purchased the Akash Institute. Akash is giving IIT training, correct? Now, whatever happens to Byju's, Akash will NEET. Oh, sorry, I didn't know, guys. I just know Akash name. When I've seen that board many times. NEET training. IIT needs CA. Same pressure, guys. Different course. Different course, same pressure. You can compete. Who has more pressure? You can have a race. Okay. Fine. NEET, as Ram is saying NEET. There is one student I know. He finished MBBS. Now he finished CA also. Okay. Really. He wanted to do CA. His parents told you should do doctor. So he finished MBBS, gave certificate to the parents and told, oh, I will do CA, and he finished CA. He's not even 30 yet. He finished both. Okay. Now he's continuing in CA job. There's one more guy like this. One guy wanted to be an astronaut. Parents told CA. So he finished CA. Now he went and joined ISRO. He's working in ISRO. That is okay. CA finished, go to ISRO. But MBBS, CA, I have not seen a combination. Deadly combination. Okay. Come back. So Akash Institute for Byju's is a CGU. Whatever happens to Byju, already scam, a lot of trouble for Byju is going on. They're going to shut down. They've closed from 220 centers in India. They just have 4 centers left now. But still, Akash is still profitable. Akash will continue NEET coaching. They will keep doing all of this. Like it's a separate CGU. Are you following up? Smallest identifiable group of assets generates cash flow independently from other group of assets for which there is a separate active market. Now, don't get confused with this and AS17 operating segments or segment reporting. CGU is not a segment. Classic example. Dunzo is a CGU, but Reliance segment will be e-commerce business. E-commerce will have Ajio, Reliance Digital, then whatever online websites they have. Reliance, what else is online, guys? Ajio, everybody knows for buying online shopping. Dunzo, all Reliance online will be Reliance segment. But CGUs are multiple. Are you following, guys? Getting the difference? Huh? Okay, we have done enough discussion in CGUs. Let's straight away go and do questions where they ask you CGU or not CGU. Okay. We are going to go to practical questions in the book. So this time in new syllabus, I have told many times, but since we have a few students who have newly joined us, in new syllabus, those who are watching this class, in new syllabus, practical questions behind every chapter, they have added a lot. Your new syllabus study mat roughly has 100 new questions from the old. Sir, only for these topics or no? Even the existing topics like AS10, AS7, AS18, AS18 in old syllabus book had only 1 or 2 illustrations. Now there are 14 illustrations in AS18. AS20 or AS10 earlier had only 12 sums. Now there are 23 sums in AS10. AS7 earlier had only 5 sums. Now there are 14 sums in AS7. So existing topics also they have added new sums in the form of practical questions behind. But those who have attended the previous class don't have to worry. Some of those questions are added now from other books. So you have to solve even those practical questions for existing sums, existing standards. Are you following, guys? That's why I said study mat itself is enough. So don't think, sir, new syllabus means only AS 15. What is that? 28 and 25. All standards, new questions in the book. You have to do it, guys. So be very careful. New study mat has a lot of new stuff. Come back to this question. I am not trying to scare you. It's actually a blessing in disguise. That means study mat has 100 new sums of. That means in exam, they will first test this. That means you know the source of question paper. It's going to come 100 marks from your book or at least 80 marks from book. You can't get a better advantage. Previously, the new syllabus was May 2018. Previous new syllabus. Go see that question paper. Fully from the old syllabus study mat. Always happens. The first 2 to 3 attempts. 2024 all exams will be from the book. May, November 24, everything will be that. Whether it's May, November, first 2-3 attempts. Okay. Anything addition, I will take care of it, but for now it's fine. Come back to practical question 1. A publisher owns 150 magazine titles. What is magazine title? Mint, Archie's magazine, Malayalam Manorama, like this, there are magazine titles. Publisher. Publishing company owns this. Like Sun Pictures, I own rights for 100 movies. Like that, magazine titles. Of which 70 were purchased from outside and 80 were self-created. I made my own magazine, others I purchased. Like Netflix, buying rights for movies. Some movies they buy, some they make. The price paid for a purchased magazine title is recognized as an intangible asset. Yes, copyright, I paid for it. The cost of creating magazine titles and maintaining the existing titles are recognized as an expense when incurred. Cash flows from direct sales and advertising are identifiable for each magazine title. Each magazine, Archie's one magazine, then Mint one separate magazine, I can identify cash flows for that, who's buying, who's not buying, what ads. Titles are managed by customer segments. Of course, those who's reading Archie's won't read Mint. Those who's reading Malayalam Manorama, whatever, will not read some Tamil magazine, correct? So same. Different customer segments I have classified. The level of advertising income for a magazine title depends on the range of titles and the customer segment. Okay, all this I know already. Management has a policy to abandon old titles. Old, what to say, magazines, nobody is reading. So, you want to abandon old titles before the end of the economic life and replace them with the new titles for the same customer. So, for example, Dragon Balls is an old title. Now, I want for the same users to keep them engaged. So many new versions came. Dragon Balls, this, Ultimate, this, that, so many, I don't know what is that. So many are there. So, for existing user to keep them engaged, new things will come. Like, for example, Marvel, everybody can connect with Marvel. Dragon Balls, I don't know if you know. Marvel. Once Marvel Endgame got over, still I want to keep you in hook. So, summa, this time travel, that time travel, this universe, they keep building new shows. So, fans will keep always excited. Okay. What is the cash generating unit for an individual magazine title? Should I consider, my question is, should I consider this 150 magazine as each asset or all 150 as CGU? Is the question. Are you following? Each as a separate asset, intangible asset, or all as one CGU? Answer. How many of you each as separate? How many of you CGU? Nobody for CGU. Why? Each asset is capable of generating its own cash flows, and it can, each magazine title can operate independently from the other magazine. That is the only answer. Go to the last line. Each magazine has a separate cash flow, separate cash generating unit. Cash flows are largely independent of each other. That means CGU concept will not come here like the AC. Are you getting the question, guys? From where this question they brought in? This question number is practical question number 1 for you book. Question 5. Those who have the book, it's question 5. Depends on which book you have. Those who have the book, question 6. No. The book I gave is question 5 or practical question number 1. Or in study mat, ICA study mat, it is question number 6. Okay, fine guys. Here I have just kept numbers like this. ICA study mat, it's question number 6. This question came into ICA study mat. How, sir? End of the class, remind me. CA final impairment has this question. Just 2 days back I took final class, same question we discussed there. Same question again over here. Okay, next. Yes, Vignesh. Yes, CGU. Purila, another. Meaning of CGU. Cash generating unit. This is the definition. See, CGU means one asset separately. Tanya, one asset can't generate cash. Group of assets are generating cash. Got the doubt clear, Vignesh? Correct. Because each asset can generate, each magazine title can generate cash by itself. It is not a CGU. Okay. Correct. That I will tell you next. We have to do that next. That will come next. Okay, do question number 2. Question number 6 for those who have the book printer. ICA study mat. Question number 7. Practical questions. Okay, we have to do all sums in the book, including practical, guys. Follow. An asset does not meet the requirements of environmental laws which have been recently enacted. Which impairment? External indicator and internally I haven't followed. Okay, external indicator. The asset has been destroyed as per law. Law said no, destroy it. The asset is carried in the balance sheet at the end of the year at 6 lakhs. Estimated cost of destroying the asset is 70,000. How is the asset to be accounted? Asset is destroyed. That means I will write off P&L to asset 6 lakhs. Apart from this, I have another cost of 70,000. That means my estimated selling price here is negative. What is estimated selling price? Selling price minus cost of disposal. Here selling price is 0, cost of disposal is negative 70. So now let me do impairment loss. Impairment loss is equal to carrying value for this is 0 because I wrote off a compare with recoverable value. Recoverable value is value in use. Value in use 0. No cash flow. What is my estimated selling price minus cost of disposal? Estimated selling price is 0, but cost of disposal is negative 70. So this 70 I will provide because it's a loss. So I will provide for the negative 70,000. Impairment loss will be calculated. This 70,000 will be, entity should recognize the liability for cost of disposing the asset of 70,000. Are you following, guys? I am yet to incur, going to incur, so it becomes a provision. And in AS 10, remember there is a concept called dismantling cost. So this answer is read along with AS 10, AS 28, AS 29 all put together. AS 10 dismantling cost, create provision as per AS 29 and AS 28 for impairment. Unique question, basically trying to show negative impairment, like negative I will account. Clear, guys? MCQ question, nothing more than that. Let's see if we can do this question. Perfect. Illustration, question number 3 in this book in PDF. The book that you have, question 7, ICA, question 8. So many sources you guys are watching this class. Whichever material you have, you watch it, guys. Okay. Venus Limited as a fixed asset which is carried in the balance sheet on 31st March at rupees 500 lakhs. Super. As on that date, value in use is 400 lakhs and net selling prices. Calculate impairment loss quickly, guys. 10 seconds. What is impairment? 500 will be compared with higher of 400 or 375. So I will take 400. Impairment loss 100. Past journal entry. What is the entry? P&L account debit to asset. But can you pass a detailed entry instead of P&L? Impairment loss to, see, you are passing the entry P&L to asset. Very much correct. This is net entry. What is detailed entry? Like depreciation. Depreciation to asset, P&L to depreciation. Like that, impairment loss account debit to asset. Transfer entry is P&L to impairment loss. That's it. This everybody knows. Like salary to cash, P&L to salary. Transfer entry with the source entry. Are you following, guys? This will be the entry. How impairment loss will be shown in the balance sheet? How it will be shown? This asset is how much? 500. Now reduced by 100. So normally how we will show the asset? 500 minus depreciation if any, minus impairment loss carrying value. So carrying value is now completely changed. All this time you thought carrying value is cost minus, but now it is cost minus depreciation minus impairment losses carrying value. That only I explained over here in the start in the notes. What is carrying value? Original cost minus accumulated depreciation minus accumulated impairment if any. Are you following up? That is the book value of the asset or CGU. Now you are getting what is CGU. Okay. Let's check the answer for this in the study material. Loss is 100. Super. Entry same thing. They are transferring to provision like accumulated depreciation. We are transferring to asset, and then in balance sheet asset minus 100 minus impairment loss, this no depreciation is there, that's it, sum is over. Are you following, guys? This question, okay, we will come back to this little later, we can't do that at the moment. Perfect. Question number 5, beautiful question. Again, from where it came, Ind AS 36, CA final book, copy, pasted. Okay. Question number 5. For you in practical questions, ICS study mat, question number 10, our book question number 9. 1, 2 difference here and there. Okay. Look at the question. If you can solve this question, you have understood the standard. Half the standard is in your group. Still CGU part is left, but we are done with half this question. Let me read. They are asking 3 things. Find out impairment loss, treatment of impairment loss, current year depreciation particulars for the asset. Details are fairly simple. Cost of asset, useful life, salvage value, current carrying value, useful life remaining, recoverable amount, upward revaluation done in the last year. First you find impairment loss case. Next we will do the rest. Can you find the impairment loss first? Don't bother about anything else. Quickly. I want you to try it, guys. Compute the 3 things. If something is not there, you can take as 0. Nothing will happen. Compute the impairment loss. These are all basic sums. Standard is easy, guys. Just because it's new, don't think it's difficult. What you have in syllabus is easy. Exam, they will ask easy only first time. Straight away, he will not bring one final question and keep a complex sum. Easy one it is. Easy question from final book is brought. What's the impairment loss? 1 point. One answer I got is 1.30 lakhs. 1.30 lakhs. Dhyaneshwar's answer, guys. Others, anybody wants to counter him? Generally, Dhyaneshwar is wrong. So come on, guys. Fast, do it, guys. Yes, Shahira answer. Come on, guys. Impairment loss. When I solve the sum, you will tell 15.30 lakhs is one answer. Impairment loss. Anybody else? Kalyan? Okay, follow, guys. I have to compare 3 things. Answer 15.3. I have to compare 3 things. Carrying value with my recoverable value. Recoverable value is higher of value in use or estimated selling price. First, recoverable amount, he gave it up. What to compare? Nothing to compare. Given. Who's searching for value in use? Not there. Why you will search? Estimated selling price, not there. So copy paste. How much, guys? Copy paste the 12 lakhs. Are you following, guys? Carrying value, how much? How many of you tried to compute the carrying value? Original cost 56, life 10, minus 0. How many of you tried to compute? They gave the carrying, he is given. Both are given, guys. Come on, guys. So difference is what? 15.3. Dhaneshwar got 1.3. How? I asked what is the loss. I didn't ask you accounting. What is the loss? His answer also is correct. His answer is for next thing. Correct. Simply I told his answer is correct. It's for the next one. So here 15.30 is the impairment loss. Are you following, guys? This is impairment loss. Treatment of impairment loss. Then if you don't take personal answer. Treatment will be, I will credit my asset to the extent of 15.30 lakhs. What to debit? Normally I will debit what? P&L. But before debiting P&L, I have to check if there is any revaluation done for asset. It's there. How much? 14. So I will write here. First I will debit revaluation surplus, revaluation reserve, multiple names. How much? So balance will go to this 1.3 only he told. Are you following, guys? How many of you got this correctly? understanding simple sum. I scared you by telling final sum. It's actually a final sum. But that's all sum. Are you following, guys? Ram, getting it? Everybody got it? No computation, nothing complex. This is your impairment loss. Question asked the first to find out impairment loss. First answer is 15.30. Let's go down and check. Look at this. Impairment losses. Look at this. Impairment loss 15 lakh 30. Accounting for impairment loss 14 and 1 lakh 30,000 separately. Are you following up? Sum is not yet over. Current year depreciation. What is the value of asset after impairment? Let's find out. Before impairment, it was 27.30. Impairment minus 15.3. That only you found no here. See, you credited asset by how much, guys? 15. That means I have to reduce asset by 15.3. So balance carrying value of asset will now be 12 lakhs, which is nothing but my recoverable value. Guys, you are basically, typically, if you look at this, typically you are bringing the asset from 27.3 to 12. That means book value of asset will be 12. Correct? This 12 lakhs asset today is still left in the business for how many years? 3 years. So what is the balance depreciation? I will charge a depreciation of 4 lakhs. Sir, what about residual value? Should I take or no? This sum, it is not there, nil. But if it is there, then you have to consider that. Future depreciation. So depreciation will be 4 lakhs per annum for the remaining 3 years. Are you guys following? Vignesh, understanding? Online, Netra, are you understanding? Netra's, okay. Actually, I didn't even see Netra's name. I assume she will be there in every class. Yes, she's there. Okay. Fine. 4 lakhs. That's your answer. 4 lakhs is the depreciation. 4 marks. Easy, guys. Standard easy or difficult? Hello? Clear? So this is the core, guys. That's an equation. Carrying value, recoverable value, computation with logic. Next. Put the doubts in the chat. Anybody online? I'm just seeing at this level, will you be able to solve this sum or not? That's all. Okay. Fine. Do you want to do one more sum or go to concept or a short break? Fine. Whatever you see, today we are not finishing until the standard gets over. So let me just write down or at least give an illustration of what is left in this standard. Individual asset, all concepts are done. We have to, I only taught you what is a CGU. We have to learn how to do impairment for a CGU, how to do reversal for a CGU. In-depth concept for 1 hour. Then we have to do some sums and I will also be doing MCQ. Whatever is there in study mat, fully we will do. MCQ also will be done. See you all post the break. Recording students can go and watch the next recording. Thank you, guys.